There is a stock sitting at around $5 right now. $5. And it has one of the most direct, documented, mission-proven connections to what could genuinely be the largest IPO in the entire history of the American stock market. Not a rumor, not a Reddit theory, documented hardware, flying in space right now on a SpaceX rocket that launched just weeks ago. And yet almost nobody in the mainstream investing world is paying attention to it. That silence right there, that is exactly where the opportunity lives. Stay with me through this entire video, because the stock I am building toward is one I genuinely believe most investors are going to wish they had heard about earlier. And that moment, the moment you can still get this name at this price, is right now. A quick note before we get into it. Nothing in this video is financial advice. I am not your financial advisor. I am an investor sharing my own research and reasoning. Do your own due diligence. Understand your own risk tolerance and make the decisions that fit your situation. This particular stock is also on the more speculative end of what we cover here, and I am going to walk you through the risks honestly. With that out of the way, let us get into it. Let us start with the big picture, because the scale of what is approaching matters before any of this makes sense. The SpaceX IPO is not just another company going public. We are not talking about another app or another software platform with a catchy name. We are talking about a potential valuation that some analysts place as high as $2 trillion. $2 trillion on day one of trading. That would make SpaceX one of the largest publicly traded companies on the planet from the moment the opening bell rings. Not after years of growth, on day one. And when that happens, and at this point, it really is a question of when, not if, the money flowing into the space sector is going to be staggering. Institutional funds, hedge funds, ETF managers, retail traders, analyst reports, media segments, all of it flooding into every company with a credible claim to the SpaceX story. And here is what most people miss. That movement does not start on IPO day. It has already started. Capital is quietly rotating into space-adjacent stocks right now as serious investors try to get positioned ahead of the wave. Some of those stocks have already run hard. Others are still sitting near the bottom of their 52-week range, completely ignored. That second group, the overlooked names with real documented mission exposure, is where the most asymmetric opportunities live. And that is exactly the category our stock today sits inside. Before I give you the name, I want to walk you through something that most finance channels skip over, and it genuinely costs people money when they do not understand it. When you are investing in a sector being driven by a major narrative event like a blockbuster IPO, there are two very different forces moving stock prices. The first is fundamental value, real revenue, real contracts, real backlog, real margins, the numbers you can pull from a public filing and actually model. The second is narrative premium. That is the extra price the market pays simply because a stock is close to an exciting story. And here's the part nobody talks about. In the short term, narrative premium can be more powerful than any financial metric on earth. That matters for one specific reason. When the IPO drops and the event everyone was anticipating finally arrives, institutional money is going to rotate. The hype cools. Reality sets in. Some of the stocks trading at 50 or 75 times revenue, purely on the strength of the story, are going to have an uncomfortable conversation with gravity. The investors who actually do well in these situations are the ones who own companies where there is a real underlying business taking shape while still capturing the narrative premium as it builds. They know why they own the stock and what the exit looks like. Keep that framework in mind, because the stock we are about to talk about is genuinely a different kind of setup than the bigger names everyone is already chasing. Most people think of SpaceX purely as a rocket company. That is like calling Amazon a bookstore. SpaceX today is effectively three major businesses under the same roof. First, the launch business, Falcon 9, Falcon Heavy, and Starship. Second, the Starlink satellite constellation, with thousands of satellites in orbit selling internet connectivity to consumers, businesses, ships, aircraft, and governments worldwide. Third, defense and government services, Starshield contracts, NASA programs, and a growing pipeline of lunar and national security missions. Each of those businesses has its own deep supply chain touching dozens of publicly traded companies across materials, semiconductors, hardware, software, communications, and defense. But the part of the SpaceX story that almost nobody is connecting properly is what happens after the rocket actually reaches orbit. Falcon 9 launches what is called a transporter mission, a rideshare flight that carries dozens of satellites and payloads into space at the same time. Each of those payloads still needs to be delivered to its specific final orbit. It still needs to be activated, operated, and supported. That is a real bottleneck in the space economy right now. And solving that bottleneck is exactly what the stock we are about to discuss does. On SpaceX rockets, mission after mission, the company is momentous. The ticker is MNTS. The stock is trading at around $5. Here's what Momentous actually does. They build something called the Vigoride Orbital Service Vehicle. Think of it as a specialized spacecraft that hitches a ride on a SpaceX Falcon 9, then once in orbit, acts as a host platform for other customers' payloads. It can carry over 300 kilograms of payload capacity. It supplies up to 3 kilowatts of onboard power. It conducts autonomous rendezvous and proximity operations. It demonstrates in-space assembly. It is, in effect, a piece of orbital infrastructure that turns a single SpaceX launch into 10 different working missions at once. And here is where this stops being a technology pitch and starts becoming hard, documented evidence. On March 30th, 2026, Momentous launched their Vigoride 7 mission on SpaceX's Transporter 16 rideshare. That is not a future plan. That is hardware operating in space right now, carried there on a SpaceX Falcon 9. On board Vigoride 7 are 10 separate government and commercial payloads. That includes roughly $4.2 million in contracts with DARPA, the Defense Advanced Research Projects Agency, which is the most prestigious research arm of the U.S. military. It includes a $1.9 million contract with SpaceX, the innovation arm of the U.S. Space Force. It includes multiple NASA contracts, and it includes commercial customers like Orbit Fab, Scout Space, and others operating cutting-edge demonstrations in low Earth orbit. But here is the detail that genuinely separates this setup from the typical penny stock space story, and it is something almost no one is connecting publicly yet. On April 22, 2026, Citadel filed a Schedule 13G disclosing a 9.97% passive stake in Momentous. Citadel, the hedge fund run by Kenneth Griffin, one of the most sophisticated, most data-driven investment firms on the planet. They do not take 9.97% positions in penny stocks by accident. They build positions like this because their analysis says the risk-reward equation makes sense at the current price. A few weeks later, Davis & Kempner, another major institutional investor, filed a similar disclosure indicating a stake of over 5%. When this kind of institutional money quietly accumulates a position in a $30 million market cap company that nobody in the financial media is talking about, that is the smartest money in the world telling you something. The market is just not listening yet. Let us talk about the actual numbers, because this is where the speculative nature of this stock has to be acknowledged and respected. Trailing 12-month revenue at Momentous is approximately $1.1 million. That is small. The company is currently losing money. The stock has had a brutal year, down from over $40 to its current level. That is real. Anyone telling you this is a low-risk stock is not being honest with you. But here is what changes the analysis. In the most recent shareholder letter, Momentous issued guidance projecting $10 million in revenue for 2026. That is roughly a 9 times year-over-year increase. And critically, that revenue is not speculative. It is tied to milestone payments on existing, already signed NASA and defense contracts. The company is not promising growth from contracts they hope to win. They are projecting growth from contracts already in hand. The balance sheet has also been cleaned up materially. Cash position has grown from $12.8 million at the end of 2025 to $26.2 million as of late April 2026. The company retired all of its outstanding convertible debt. Their next major mission, Vigoride 8, is already fully sold out and scheduled for early 2027. They moved into a new 61,000 square foot facility in San Jose to support increasing mission throughput. These are not the moves of a company quietly winding down. These are the moves of a company gearing up. And then you layer the SpaceX IPO timeline on top of all of this. When that IPO arrives, analysts are going to write initiation reports across the entire space sector. ETF managers are going to scan for every publicly traded company with documented SpaceX mission history. Financial journalists are going to look for the names with the cleanest story. Momentus has hardware operating in orbit right now on a SpaceX rocket that launched weeks ago, with DARPA and NASA money behind it, and a hedge fund of Citadel's caliber quietly accumulating shares. That is a story that becomes very hard to ignore once the sector starts getting attention. And right now, the market has not assigned that story any value at all. Let me bring this together because I want to be completely honest about what this trade actually is. Momentus is a speculative position. The current business generates a fraction of what it costs to operate. The stock is volatile. There is a history of dilution. There is real short interest. Anyone who tells you this is a sleep easy long-term hold is selling you something. This is a high-risk, high-asymmetry setup, and it belongs in your portfolio at a position size that reflects exactly that. But within that frame, what you have is genuinely interesting. A $30 million market cap company with documented mission-proven SpaceX exposure flying right now. Citadel disclosing a near 10% stake at this exact price. A 9 times revenue forecast for the current year tied to contracts already signed with DARPA, SpaceX, and NASA. A clean balance sheet with zero debt and growing cash. A second mission already sold out for next year. And an imminent SpaceX IPO that is about to flood the entire sector with attention it has never seen before. The risk is real. The asymmetry is also real. That combination, at this market cap, at this price with this institutional backing, does not show up very often. The investors who do well with these kinds of setups are not the ones who go all in. They are the ones who size positions intelligently, do their own homework, and understand they are buying a specific thesis with a specific risk profile. If that fits how you invest, this is the kind of name worth at least putting on your radar before the rest of the market catches on. If you want to keep getting honest analysis like this on the setups most channels will not touch, hit that subscribe button right now and turn on notifications so you do not miss a single video. And speaking of the SpaceX story, there is one more piece of this puzzle that I think genuinely no one is talking about yet, a specific corner of this trade where the institutional money is moving even more quietly than what we covered today. That is coming in the next video. Subscribe, and I will see you there.